How your credit score impacts your mortgage rate. First, let's start off with understanding what credit score you actually need to go into homeownership. The minimum credit score that most lenders are going to approve is going to be a 580. Now, at 580, you're not going to get the best terms and you're most definitely not going to get the best interest rates available. Usually it's going to be slightly higher. Every lender is going to be a little bit different. It could be 1 point higher than the market rate. So let's say, for example, the market rate is the best rate that you can get, by the way. So if you go to Google and you say today's mortgage rates, whatever rates that they show, that's what you call the market rate. That's the best rate that is available. Now, that doesn't mean that you can't get better than that, right? We'll talk about that in a second. But a 580 is going to get you something higher than that market rate, okay? If you want to get the market rate, then you need to be at least a 620, and that's if you're looking to go FHA. FHA is where they require 3.5% down. But keep in mind, anytime you put down less than 20%, you will be responsible for what they call a PMI, which is a private mortgage insurance. That protects the lender, not you, if you ever default on the mortgage. So they add like a 1%, 1.25%, to the final amount that you are taking the loan out from, and they add that to your monthly payment, okay? So something to think about and that you should keep in mind as well. So that's if you're going with the FHA, which requires a 620. Now, if you're looking to go conventional, which conventional, the minimum that you can put down for conventional, it comes and goes 3%, but usually on average 5%, 10%, 15%, and of course 20%. Now, to go conventional, there are lenders that can go as low as 620, but on average, you're looking to be somewhere between about 650, but you really want to be 680 or higher. Just because they can give you 650 doesn't necessarily mean you're going to get the absolute best terms. Now, you're probably thinking, well, Calvin, why would I go conventional when I can go FHA? Well, some people don't want to go FHA because of the PMI, which is that additional on your monthly payment, number one. And then number two, you may not necessarily be able to go FHA because of your DTI or because of your student loans or something like that. There are occasions where conventional is the only option. And if conventional ends up being the only option for you, then they're really going to be looking at your credit scores. And a 620 may not cut it. A 650 may get your foot in the door, but 680 and above is exactly where you want to be in order to get that particular rate. So the short version is, the higher your credit score, the easier it's going to be. Now, that doesn't necessarily mean that, oh, well, Calvin, I'm a 780 credit score. Does that mean I can get better than market rate? Not necessarily. Market rate is going to be usually the best rate that you can get. The only way to usually get a rate lower than that is by going to a different bank, seeing if they have ways to buy down the rate, maybe adding, throwing some money at closing or getting money from the seller, or sometimes lenders have special rates if you're at a certain score. But at minimum, you'll be able to get that market rate if you're a 620 going FHA, or if you're about at least a 680 going conventional. If you like this video, you're most definitely going to like the next one. I'll see you there.